you think like a broke person? Because I used to. For years, I didn't even realize that I was stuck in a broke mindset. I worked hard, made okay money, but somehow I was always struggling. No savings, no investments, no plan. It wasn't because I wasn't capable, it was because of the way that I thought about money. So I'm going to tell you 5 thought patterns that stopped me from growing and what I did to improve. Now the first one was this: I'm not good with money. And so I never learned. I told myself this over and over as if money was some complicated thing that only the rich people understood. Turns out wealth isn't about being born smart, it's about getting educated. Think of it like learning how to drive a car. At first it seems really hard, right? But once you start driving, you realize it's not about being naturally good at it, it's about practicing and learning the rules. I remember a friend suggesting I read a book about investing, and I laughed and I said, that's not for me. I barely understand my own bank statement. Pathetic. Years later, when I was over £100,000 in bad debt, I told myself I need to be good at money. My starting point was understanding my spendings, being more organized. Now, one of my mentors, the great T. Harv Eker, taught me the money jar system, which I've slightly adapted. So 55% should go to essentials. 15% should be investing. And I wondered, wow, do I have 15% to invest? You won't believe me. I started following the simple money system. I had more money to invest than I ever thought I had. So what I'm doing, I'm going to link our money management calculator for free if you want to be good with money. Okay, check it out. Okay, the second pattern is this: I'll need a lot of money to start. False. I thought investing was only for people with thousands of pounds sitting in their bank accounts. I was waiting to get rich first before I even considered it. But one day I met someone who had built wealth by simply starting small, investing £100 here, £200 here, and this is when I was up to my neck in bad debt and was learning about investing, so I gave it a go. I put a few £100 in the stock market. A year later, that small move turned into something bigger. So I put £100 into an ETF, and it's an exchange traded fund, and I put another £100 into something completely different. So I'm not going to lie, one of my holdings dropped slightly, but I profited from the ETF. And once my profit reached like 50% up, I took out the money and reinvested it in a new asset that was down. I kept doing this, never spending my profits, but keep reinvesting until today, my investments are $13 million. Can you believe this? I started with a few hundred, and today I'm a multi-millionaire through investing. Did I start with millions? No. So please don't use this as an excuse. Start with the amount that you have and start today. Okay, so here's the third thought pattern that was stopping me. I'll wait for the perfect moment. There was a time when I had the chance to invest in Amazon, but I hesitated because the stock price was going down. It was around the year 2000 and Amazon's stock was dropping and fast. I thought to myself, maybe this stock is going to go down some more. I'll wait for the perfect time to buy, maybe when the price goes back up, right? I kept waiting, thinking the price would go lower or that I needed more information before investing. But here's the thing. I didn't realize that the perfect moment to invest was right then, when the price is low. Example, at the time, Amazon's stock price was only around $1.40 per share, right? This, I think, was July 2000. I thought, what if it's going to go down a little bit further? Let me wait. I was waiting for the perfect moment to see a clear upward trend before buying, right? And what happened? Instead of buying then, I waited, and the price then went up to $2.20, blah, 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 so I missed the chance, right? And the story doesn't end there. Fast forward to today, Amazon's stock price from $2.20 is $242 per share. Had I bought when the price was low in 2000, I would have made an incredible profit, but instead I waited and ended up buying at a higher price, much higher. So here's the thing. What I learned is this: the reality is no one can predict the perfect time to enter the market, no one. If you wait for everything to align perfectly, you might miss the opportunities. In investing, the key is to start early, even if the stock price seems low or the market looks uncertain. If you invest when the price is lower, you can ride out the ups and downs over the long term, over the time. By waiting for the perfect moment, I missed an opportunity to get in at what was a really low price. Listen, the perfect time is now, because that's how you can set yourself up for the future growth, even if the market seems unpredictable. Okay, here's the fourth one. What if I fail? I used to fear losing money so much that I avoided any opportunity that carried risk. What if I invest and lose it, right? I get it. And then I started studying successful people. Every single one of them had lost money. in one or two assets, but they make a profit overall. So let me teach you how they make a profit overall, even after failing in one asset. What they do is they diversify in uncorrelated assets so that if they make a loss in one asset, another uncorrelated asset will give profit. Here's an example. In January 2021, even smart investors incurred a paper loss of minus 16% in Bitcoin. But in the same month, they made a profit of 40%. How? Because they had diversified and invested in XRP as well, which is slightly uncorrelated to Bitcoin. So even though they lost money on Bitcoin, overall, because XRP went up 60%, they made more than 40% overall. So what's the moral of the story? Don't let the fear of failure stop you. Don't let it stop you. I finally understood failure isn't the end. It's the price of entry. Every mistake teaches you something. Every loss is the tuition fee for success if you learn from it. Number 5. Oh, I'm just never going to get ahead. I kept comparing myself to others, scrolling through social media, seeing people my age living their best life, driving nice cars, buying houses. I felt like I was always behind, like I'd never catch up. And then I realized the only person that I needed to beat was me, yesterday's me. So I stopped focusing on others and I started focusing on small daily improvements. Did I save more this month than last month? Did I make better financial decisions today than yesterday? That's all that mattered. Progress, 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 not perfection. So, these are the 5 thought patterns that stop me from growing my wealth. But what's stopping you from growing? Let me know in the comments and we'll provide a solution.